Hello and welcome to Switzer TV. I'm Peter Switzer, and on tonight's show we find out why arguably Australia's best developer and builder of quality apartments, Tim Gurner, is teaming up with listed fund Qualitas to build built-to-rent apartment complexes. And we talk to property experts, buyer agent Chris Gray of Your Empire and champion auctioneer Justin Nickerson of Apollo Auctions on how to win at auctions, or at least how not to look like a novice loser when you show up and you don't know how to really do it well. And finally, we catch up with the founders of Msquared Capital to see what's going on in the market right now. That's the show. Let's kick off with Tim Gurner. Well, one of the best builder developers in the country is Tim Gurner, and he's paired up with Qualitas, which is a company that invests in real estate, to get into a space that's really the new age. It's called build to rent. And I want to see what Tim and Qualitas is planning. Tim, thanks for joining us.
Thanks, Peter. Good to see you.
Yeah, same here, mate. Now, build to rent is the new idea to help people who really can't buy what they want to buy, where they want to buy. But I never expected you to get involved in this space. What encouraged you to go into this area? Because you're the luxury apartment kind of guy who sells to high-end investors who often rent and then move into the places when they downsize. What made you get interested in the build to rent space?
Yeah, look, Pete, it's really an interesting one. I mean, it has been a really big decision for us for the brand. We wanted to make sure that it's something that would align with our brands and what we want to do moving forward. It's interesting, it's a new asset class here, but as you know, it's a huge asset class in the US and Europe. So in the US, it's a very, very established market where you've got your multifamily, which is your rental housing, and then you've got your condos, which is more of your sort of built to sell typical products. The European market, since the GFC, has now picked up massively in the built-to-rent space as well, or multi-family space. And it is definitely an industry that's coming to Australia and will be a big player in the Australian market. I guess it's an interesting way of looking at the rental market. It's trying to deliver a luxury product to mass, to larger scale, and people of different demographics at a more affordable rate. So you're right. It needs to be in a demographic in a country where not everybody can buy, and obviously in Australia now, it used to be the great Aussie dream to buy. I think that has definitely changed with my generation and the millennial generation, where people are more concerned about lifestyle and convenience than probably so much the big backyard. So big change in demographics, and I think it is a big segment of the market that we wanted to make sure that we are a player in. I will be honest, Peter, we spent a fair bit of time making sure that we'd be able to do a product that we'd be proud of and at the level that we want to. We're not interested in doing sort of cookie cutter standard product, as you know. So we've seen a big gap in the market for that higher end luxury product in the rental market. So yes, we won't be the cheapest in the market, but we'll have a very, very different offering to what is in the market.
So I guess the end of the day, you'll be looking after or chasing a demographic or delivering to a demographic that arguably might want to be in some of the best parts of a city, but it's just unaffordable as a buyer, but not as a renter.
Yeah, it's interesting. It is a bit of that. It's not just all about affordability, though. It is that kind of luxury of convenience as well, I guess. So people are travelling a lot more. The world is a much smaller place, apart from obviously the last 9 months. It's been a little bit different. But typically people are wanting to move around a bit more. They might spend half their time here. They might spend some time up in Queensland or overseas or wherever they are. So it's not just about affordability and not wanting to buy, but there are a lot of people like Europe. I mean, Europe, there's a huge percentage of people who don't own their own home. It is much more of a rented market, and that is just an accepted way of living, and people love that way of living, and it's more lifestyle focused, which is definitely where Australia's heading.
Explain to my viewers how Qualitas, in a sense, operates to provide the funding for you to do what you want to do.
Yeah, so Qualitas are one of the largest equity fundraisers in the property segment across Australia. Amazing group of guys, very, very smart guys. They are the fund and capital raising behind the partnership. So we are the design, the delivery and the operations of the property form. We had a look at raising the capital ourselves and decided it's definitely not our best skill set. We wanted to focus on what we're good at. So we went to the experts in that world. they are very, very connected around the world with the institutional type investors through Europe and America, and then obviously the large families in Australia. So their role is to raise the capital and all of the compliance around the property and its operation in the investment form.
Yeah. Now, will investors then be able to invest in a specific fund earmarked to fund the kind of projects you'll be doing?
Absolutely, yes. So it'll be a portfolio of buildings. It won't be just one individual building. We're doing that because we obviously want that diversity for the investors. It is targeted at sophisticated investors and families, so it will be a much larger entry price. It's not going to be a couple of $100,000. So it is definitely targeted to the larger families and institutional investors.
Yeah. And so effectively, an investor would come in, they would have their money earmarked to the build to rent project, whatever that fund might be called by Qualitas. Yep. And then ultimately then when the whole project is finished, now who then is the owner at the end? Is it Qualitas or does Qualitas sell it on to a company that then manages the build, the rental aspect of it?
Yeah, no, so it's Qualitas and Gurner, so we'll have a large interest in the property as well. So we'll be co-investors, Qualitas and Gurner in the fund. So we'll own the property with them. We will operate it ourselves, being us, Gurner, and then the investors will come in. It is very much a long-term play. We'll hold these assets for at least 7 to 10 years. It's not a short-term turnaround. Obviously, through that period, there's opportunities to pull cash out at new valuations, and that's obviously when the investment becomes more and more interesting to investors. But it is very much a long-term play. We want to hold minimum 5,000 apartments in this portfolio with a target of about 10 to 15,000. So that will be built up over 7 to 10 years.
Yeah. So that means that effectively your company then will have streams of long-term income.
Correct. That's exactly the plan.
And that is new to your business in a sense?
It's a different thing, yeah. Like our business has been very successful over the years in the off-the-plan selling market, but as you know, we are very reliant on the market. So the great thing about build to rent for us, it is a long-term hold position. It's diversity across our portfolio rather than just needing to sell apartments the whole time. So provides us diversity and also allows, it's interesting, we kind of look at it as a great avenue for the build to sell market. So we want people to rent from us, and as they grow up and they establish into the build to sell market, then hopefully they'll buy from us. Our high-end buyers that are bought downsizers hopefully have their kids living with us in the rental buildings.
Will it be a listed fund or will it be a private fund?
That's a private unlisted fund, yeah.
Okay, all right, okay. So when is the first project going to kick off, Tim?
We'll have 3 projects started construction by June next year. So about 1,100 apartments. We've got 3 locations in Melbourne, which I can't tell you just yet. We'll be able to tell you in about a month. But 3 very prime locations, incredible buildings that'll all start construction by mid next year.
Well, it seems to me Premier Daniel Andrews would be very happy that you're going to be kicking off 3 projects because creating jobs is always something a Premier always likes. Yeah,
well, that's what we need. And I think it's interesting, obviously, there's been a bit of assistance through Victoria and New South Wales with a land tax exemption. And I think it's important state and federal governments continue to look at this sector because it will be something that will help us drive out of this little COVID situation we found ourselves in. And, the build to sell market isn't easy at the moment. I mean, we are selling apartments at the moment, but it is still slower. And this is a great way for state and federal politics to actually get some real construction on the ground and happening quickly.
Great stuff. Well, it's a good story, mate, and congratulations going forward, and look forward to seeing you in the not too distant future.
Beautiful. Thanks, Peter. Good to see you.
Well, this week we want to feature how do you win at auctions, and to help us do exactly that, we've got a property expert in Chris Gray from Your Empire, and he's a buyer's agent, and he's a lot more than that. Chris, thanks for joining us.
Thanks for having me, Peter.
Do you go to auctions very often nowadays, Chris?
No, and you hit the nail on the head is most professionals don't actually go to auction because even though I'm very happy public speaking and getting over the nervousness of being in an auction and knowing what to do there, I know that most emotional people that go there have got deep pockets and their emotional money will spend more than my factual money. So if I think a property is worth $1 million, but someone else has been approved to 1.2, they actually spend up to what the bank lends them, not what the property is worth.
And so what you're saying is that the emotional aspect takes away from the true value of a property.
Yeah, and so a lot of people say, well, I only spent $5,000 more than the next people. But if you've got two people that have got no idea and they keep bidding it from $1 million up to that 1.2, they go away happy, but the property's not worth 1.2. And then they ring the bank on the Monday and say, hey, I bought a property for 1.2. And then the bank almost faints and thinks, God, how are we going to deal with this customer now?
So really what you're saying is that there's a very different attitude when it comes to an investor versus a person who's going to live in a house.
Sure. So an emotional person that lives in their house will obviously be more emotional, but they still want to buy at the right kind of price as well. If they're buying something so unique that it only comes up once a year, then sure, they may need to pay slightly over. But if you're buying a regular house, then there's no point paying over the odds. You just need to walk away and move on to the next auction till you can buy at the right price.
So your attitude really isn't winning at auction means getting the property. You're saying getting the property at the right price is winning at an auction.
Exactly. That's the bottom line. So whether you buy it off market, in the first few weeks of the campaign, at auction or after auction, doesn't matter. As long as you buy the right property at the right price, then that's the bottom line.
So one aspect of winning at auction is to win before the auction by putting in a price beforehand of what you actually want to pay.
Exactly. Or walking away at auction, making the vendor realize that no one was paying his price. He then has regret for a few days afterwards, and then maybe you can pick it up for a cheaper price then, even cheaper than the auction, because the highest bidder might have then moved on somewhere else.
So are you happy when you go to an auction with a client and it gets passed in? Because then you think, okay, that improves my chances of getting at the price I want to pay.
Sure. So it depends what you're buying. If I'm buying $1 million Bondi unit, I've got to go pre-auction because someone's always going to buy it at auction. It's not going to get passed in. But if I was going for maybe a block of units, say $10 million block of units, I know not everyone has got $10 million. So I'd rather actually go to auction on a block like that rather than buy it pre-auction because I want the vendor to realize there's not many people bidding and he needs to take whatever he can get on the day.
So therefore, your tip to sellers of Bondi apartments is always go to auction.
Yeah. So our general advice to clients is don't sell and refinance instead. But if you do want to sell or you do have to sell, pick the best agent, do the best marketing campaign, take it to auction, and that's your best chance of getting 10 or 20% over the odds.
Okay, let's talk about the fact that, all right, people might ignore some of your really good advice and they're going to go to auction and they emotionally want this property. What are the kinds of things, like, for example, I've done a number of auctions where I've won, inverted commas, and I've waited right to the very end before I've bidded, and I've watched the prices go from, jumps of 10, 20,000. And when they get into the twos and the ones, that's when I figure these people are really finding it hard. And then I'll come in and make an offer, say $10,000 higher. And I've won. It's tended to work, but it doesn't mean it's the right thing. What is your view on the technique that's worked for me?
Yeah, look, I'm very much in your camp there, Peter. The main thing is to start with is to know what the property is worth. So we always get an independent valuation before we go to auction. So we know exactly in the bank size, unemotionally, what's it worth. And then you can add the emotional money on top of that. So there's two thoughts. Either go in super strong. So my first auction in Australia is a guy in a pinstripe suit. He was right at the front of the room. He was buying that property. He was betting big all the time. And even if people have more money, they were just scared off. So that's one method. The other one is to do exactly what you've done, and that's typically what I do, is don't fuel the fire. Don't fuel the energy in the room, putting in lots of little bids. You want it all to go slow, get it down to the last few dollars, and then chuck in 5 or 10 grand. And in the grand scheme of things, it's not a lot, because I've seen things move in 300,000 in $1,000 increments, and it took forever. So a 10 or 20 grand bid can just knock them out the water.
Yeah. I remember going to an auction many years ago where the reserve was expected to be about 1.2 million, and two bidders basically went 10,000 by 10,000 up to $2 million. And the owner was knocked out, everyone there was knocked out. But both those people were emotional. They wanted to live in Edward Street, Cooper Park, and there was nothing was going to stop them.
And so, look, we see it on the block auctions on, I think it's Channel 9, and you get professionals trying to disrupt it. So they suddenly change the bid amounts or do dollars and cents. They do anything to disrupt the flow. Whereas if you're going 10,000, 10,000, 10,000, it's just repetitive. So a lot of people will try and upset those things. Sometimes it annoys the auctioneer though, and then you've got him offside. So that's not necessarily a good idea at the same time.
Positioning yourself, do you position yourself in a special place?
Again, I can do two different things. So sometimes I can be shorts and t-shirt and looking poor as if I've got no money.
Yeah.
And other times I'll do the pinstripe suit right at the front, being big and bold. Other things I've done is I know a lot of the auctioneers and the agents. I'll go up and hand the auctioneer a bottle of water at the start, and some of the agents, and then suddenly people then think, oh, what's going on? This bidder knows the inside. He's in cahoots with the auctioneer. And again, it's doing nothing illegal, but it just puts them off, and it puts questions. Is this really valid? Is this a dummy bidder? Is something going on? And so it's really just upset. And now a lot of first home buyers or new people to the industry would be thinking, there's something weird here, maybe I just won't bid.
Do you wait until you know that the property's on the market? Because you often hear people say, is the property on the market? And that kind of person does not want to participate in any bidding before they know it's on the market. What do you think about that, Chris?
Yeah, so a lot of agents and auctioneers are trying to stop that process because they know a lot of people won't bid until it happens. And so they quite often announce at the start of the auction, we're not going to announce it on the market, but in a way they generally do anyway. Look, I'm trying to wait till the auctioneer is going 1, 2, 3 and almost hammered down, but my heart rate goes through the roof because I know the chances are they're not going to do it too quickly. They generally always go and speak to the vendor before then they put the final hammer down. So it can be a real heartbreak kind of thing of knowing how long to leave it. But I've generally got a pretty good idea, and I'm doing what you were doing, is putting that 10 grand in, but really when the auction is pretty much ready to do it. Because when I put the 10 grand in, I want him to say, any other bidders? No, hammer down, and then the property's mine.
Have you ever mistimed it and really been disappointed that the property you missed out?
One of the scariest times was I was in Spain and it was 4 a.m. I had a client in Melbourne and I had two bidders in a Sydney auction, both at opposite sides of the room, all on a conference call. And then we had problems with coverage. And so we couldn't tell if we had the bid, and the client was saying, I'm happy to go another 10. And yeah, that was the scariest time in my life, I think, because that was at around $10 million. Lucky we got it.
Okay. And what tricks do auctioneers employ to get your price higher, and how can you avoid it?
Oh, look, you've known from Sky, Tom Panos, one of the best auctioneers in the country. He's very, very confident. And if you're unsure of what's happening and you've got a very confident auctioneer like Tom, they can almost get you to do anything, bid against yourselves, kind of push you above your limit, tell you in front of a big crowd, oh, that's not enough, you need to increase your offer. And basically they're putting pressure on you. And look, that's their job. They're working for the vendor. And so this is when you need to know the rules to say, no, I'm happy opening the bid at 500. If your vendor doesn't want to take 500, maybe you want to go and check with him, because if I was him, I'd be taking it, or another $500. And so you just be confident on yourself. And my main recommendation is go to 50 auctions, lots of different auctioneers, lots of different areas, learn to see what's happening. Don't necessarily believe the TV shows because you're just getting the edited versions there. Go and see what the mood is and see how many people are around. And it's like anything, practice makes perfect. Or if in doubt, hire a professional, and a professional can go and do it for you.
If you don't want to hire a professional, should you bring along some friend or member of the family who has no problem telling you the truth?
As long as they know what the truth is. The problem is with property is everyone's an expert. Even the armchair people that have never bought a property in their lives, they're all experts. So my advice is, if you can't afford to hire a professional, hire someone that has bought lots of property and is wealthy, because they're much more likely to be able to know what they're doing.
One last one, Chris. A friend of mine who is pretty good at property was actually walking past a house at the end of her street, and there was an auction going on. She hadn't looked at the property. She knew the property because she walked past it all the time, and she just stood around, listened to the price, and she just thought the prices were ridiculous because she knew the value of properties in the street. So she bought it sight unseen. And she actually did buy a very good property. But my question to you is, sometimes should you just turn up to auctions because you could be surprised at the price you'll get a place at?
No, look, I think it's a very dangerous thing. And look, it's a great story for dinner parties to say, hey, I just walked down the street and I spent $1 million or a couple of million on a property. But in reality, look, we're professionals. We're buying hundreds and hundreds of properties. Before we buy any property, we get an independent valuation, a full building inspection, full strata inspection, pest inspection if it's a house, and to run things through the solicitor, because you never know if council's suddenly putting a road through, or there's an electricity station that's about to go in there.
Good point.
There's something that you've never even heard of that could devalue that property. You're spending millions of dollars. It's pretty cool, but it's just not worth doing.
Yeah.
I had some clients at a dinner party before that were on conference call when I was bidding for them. They said, Chris, put in an offer. And I said, no, I'm here to get you the best property at the best price, not to entertain your clients over dinner. If you really want me to do it, I'll do it, but that's not what you're paying me for. So it's all about mathematics, wealth creation. And again, you'd know for yourself in financial planning, it's not a hobby. We're not playing games here. It's serious money.
Yeah, exactly right. Chris Gray, thanks for joining us.
My pleasure. Thank you.
Well, earlier we heard from Chris Gray on what he thinks are the key lessons from all his years of going to auctions and buying properties for clients. And now we're talking to Justin Nickerson, who's a 3 times winner of the Australian Auctioneer of the Year Awards, and he's from Apollo Auctions. Justin, thanks for joining us.
My pleasure. Thanks for having me.
Okay, let's start with some views from you on what you think makes a really successful bidder at an auction.
Well, I think there's 2 things mainly. The first one's one that I guess you don't have a lot of control over, and it's that who has the biggest budget generally wins. It usually comes down to budget and want. You know, if you have got the largest budget there and you want it more than anybody else, there's really not too many strategies that are going to stop you from buying a property. But what we tend to find a lot is that the people who do buy properties at auction come with a plan. So they've researched auctions, they've got a plan in place that they then go ahead and execute. And that planning allows them to catch other people who maybe aren't as well prepared on the hop and potentially buy properties that they might have been a 50-50 chance of buying prior to the auction starting.
Right. Do you think that there is a way of bidding that actually gives you an advantage, even from the sense that the advantage might be that you don't pay as much as you would if you bidded in a different kind of way?
Yeah, look, we see all different sort of styles get put into play. I had an auction this morning where one of the bidders tried using unusual numbers. So they jumped the increments in quite unusual numbers, not your regular 5s or 10s. They'd be throwing, 18s at various points and different things. What we tend to find consistently, though, the best approach is those who bid quickly tend to have the most success. And the reason being, I think, is they not only give off the impression that they've got an unlimited budget, so it can be quite demoralizing for their competitors, but also what they do is because they're not the one making the decision constantly, they're putting the decision back on their competitors over and over and over again. So it feels like they're constantly having to make decision after decision. So I think that bidding quickly is a really good strategy that allows that pressure to go on your opponents rather than on you at various stages of the auction.
Yeah, you're saying that if the person you're bidding against is deliberating before they decide, you start thinking they're finding this hard. The pain started to come in. So every time they make a bid, if you counter that really quickly, it's basically saying, don't worry, mate, you're going to lose no matter what.
Exactly. Yeah, it gives off the impression, be it real or imagined, that you're not concerned about where the bidding's going because you're just getting in front non-stop. So I think that those that have got that strategy in mind, when the other people are deliberating, they're almost deliberating, 2 moves ahead. So they're saying, okay, if these people jump back in again with another 5, let's go straight away. And then, that'll happen. And then basically they're sort of controlling the auction by being a step ahead of their competitors.
Do you ever see anyone who may well have decided that they're not going to win. So they keep bidding to make the other person, the arsehole who's going to win, pay more.
Look, sometimes it's a pretty dangerous game, though, isn't it?
Dangerous
it
game,
comes with pretty heavy consequences if you misjudge where the other person's budget or capacity might end. You do see some people, they'll say it. They'll say, "Oh well, we'll just bid again then because he's going to keep bidding," and you think, well, again, it's a pretty dangerous game with big consequences if that's the one you're going to employ.
What are the legal implications if you do overbid and then you just say, "Oh, hang on, I can't afford that. I'm pulling out." Can you get away with that legally?
Look, not really. In most states and territories, in all states and territories, you're bound. The states and territories in Australia that have registration, you've already handed your details across. So even if you do a bolt and jump off to the car and take off, the auctioneer has authority to sign on your behalf. So they can actually complete the contract on your behalf. Then you can be legally pursued for it. In the states where registration isn't mandatory, you can maybe make a case that if they don't know who you are, you can jump in the car and drive off. But again, you're sort of talking 1 in 1,000 or 1 in 10,000 type scenarios, I think.
Yeah, because I'd be thinking that the underbidder would be saying, "Well, hang on, I was a fair dinkum bidder. The other guy was an idiot, so I'm entitled to claim this property." Yeah,
look, that happens a lot. And what you tend to find is the underbidder also then says, "Well, the only reason I went to X is because that person was bidding me up there, and they're now gone. Therefore, I'll actually buy it, but I'll buy it back at the level where the next competition, petered out." So yeah, it opens the door to a lot of different legal scenarios, and like with most legal scenarios, the only winner in the end generally is those on the right side of the law, the lawyers, and they get to fill their pockets.
Okay, so there isn't like a real estate institute, a place that arbitration where you can actually sort out these kind of disputes?
The real estate institutes aren't regulatory bodies, so they're advisory bodies in each state and territory. Each state and territory has its own individual one. For Queensland, for example, we have the Office of Fair Trading. So the Office of Fair Trading are the one who generally wades through those kind of disputes and then can make legal determinations on it. But again, if you're legally trying to pursue someone who doesn't have the capacity to complete, you're going to end up between a rock and a hard place anyway. So usually what happens is it goes through an arbitration process and the right sort of result gets agreed to across the different stakeholders.
Has there ever been any legal protests about the way real estate agents will sometimes, they'll go to a bidder and actually talk them into going up a little bit more? Has anyone ever as a consequence of that sort of real estate hand-holding, ever protested legally over?
There's been a couple of cases where people have said the only reason I bid was effectively I was cajoled into it by the agent. Again, it's people. I think the undertaking of the law, though, is that if you're there and you're bidding, you're accepting the fact, the terms of the contract, and you can complete on the contract. And the fact that someone's talking to you doesn't change those things. So I think what we find a lot is that if people don't want the influence of an agent, they're very quick to tell them, please give us our personal space, let us make our own decisions. But occasionally it has been legally challenged, but most of the time it's been found in the case of, well, you're there and acting in your own behalf, and any other such advice you might be getting, doesn't actually impact that.
I know I've been to a lot of auctions where we're all standing around in the street, and I think other countries of the world, you might correct me, they're quite surprised that we do that. But have you ever come across a punch-up as a consequence of the fact that we are standing side by side and we are, in a sense, taking people on a very emotional subject? Have you ever seen a punch-up or a push-around as a consequence of a bidding duel?
Not a physical one. We've seen a few verbal disagreements after it. The funniest story I have on that is we had a father and a daughter bidding against each other. So they were two separate bidders bidding against each other. The daughter bought the property, and as a consequence, the father wouldn't allow her to jump in the car with her after. So he drove off. She had to get an Uber to wherever she was heading to. It shows, I guess, they always say blood's thicker than water, but sometimes your blood's not quite thick enough, I suppose.
Yeah, real estate's thicker than blood.
Exactly.
All right. So if you had to give someone advice going to an auction, what are the most important lessons that you would teach them?
First and foremost, do your research, and don't just research, the property, which a lot of people do. They research recent sales, research auctions. Go and watch a few, see how they work, see what happens to the highest bidder, see why people stop bidding, what are the signs they give when they stop bidding, all those kinds of things. It stuns me when we turn up to an auction and we meet a buyer and a buyer says, "Oh yeah, I'm a bit nervous. I'm at my first auction," and you think, you're about to make a life-changing decision here, and you're going into an environment that you're completely unfamiliar with. That's just a recipe for disaster. So do research, go attend a lot of auctions. There's heaps and heaps of auctions that are online now, so you can even watch them from your own comfort of your lounge room. So do your research, have a plan going into the day. People say all the time to us, "Well, I'm just going to see what happens." Well, inactivity at an auction isn't a strategy. It's just a hope. You legitimately cannot buy the property unless you bid. So that's clear and simple, and that's been the case since the Egyptians did auctions back when. You can't buy something unless you actually physically do something or take an action towards that. So have a plan in place, and lastly, just execute that plan. Have the plan there ready to go. If your plan is to start the auction off, then start it off. If it's to bid quickly, do that. And give yourself the best possible shot of buying the property.
Yep, 6 months ago in this program, when we'll look at the issues of auctions and talking to experts, we kind of made the conclusion that over the next 6 months, and that was probably, we're talking about April, it might be a good idea if you're in the market to show up to as many auctions as possible, because you might just get a surprising result. A, was that a reasonable piece of advice? And B, are we now finding that the bidding over the reserve sort of suggests that it's harder to win at auction right now?
Yeah, look, I think that early COVID period was the period where there was a lot of uncertainty around, and people who were transacting at that time were transacting out of need rather than out of want. So I definitely think that was pretty sage advice at that time. Look, we're experiencing, particularly here in Queensland, which is where most of our localised auctions are based, we've probably have the best auction market we've had here in 8 or 9 or 10 years, going back a long period of time. We've got a New Zealand arm to our business. The New Zealand arm, it's phenomenal, the market over there. And our Sydney and Melbourne contacts, who are the other major auction markets, they're performing very strongly as well. So I think the time for getting a good buy might have passed for the next little while anyway. And now it's actually a lack of supply out to the market that's actually the major determining force of what's going on. In most suburbs and most areas, we're seeing historically low levels of listings that are going out. And you couple that with above average buyer demand, and that's creating a bottleneck in most cases. So I think the next little while, we'll see a really competitive period of auctions. The next kind of, blip or hurdle might just be when, the government assistance packages wear off, job seeker, job keeper, mortgage freezes, in the end of the first quarter of next year. Whether that then changes the feel of the market a little bit, not sure. But I think until then, we're going to see more of what we're experiencing at the present point in time. Okay,
and there was always a bit of a hangover problem of the one-bedroom apartments, in Brisbane, oversupply, lack of interest. Are they starting to be taken up now?
Look, they're starting to be more popular. I definitely say it's probably the weakest segment of the market that we see up here is that kind of unit stock that's particularly in inner city Brisbane. And I guess now the X factor with all that is with people not having to be localized in city centres as much, because people are now working, remotely from home or with flexible working environments. Does that actually change the way that our market looks in city centres? Commercially, no doubt it will. Residentially, does it mean less people want to invest there? Less people want to be based there? Less people want to have, second or third residences there? That'll be an interesting one to monitor, I think for the next few years. So yeah, it'll be interesting times, I think, all round. Yeah,
because you could actually see people who are definitely going to be CBD workers who are pretty well heeled, who may well decide to live out in the weekend, the Gold Coast, and have a one-bedroom apartment in the city for 4 days a week or something.
Yeah, absolutely. No question. And we've already seen, there's interstate migration that's happened, particularly to Queensland. But what we're also experiencing is our bayside areas are getting more popular. People are moving away from the city because they don't have to be as situated as close to the city. They'd rather, work remotely, work out near the water somewhere. and that's been a real push, particularly areas like Manly and Wynnum, Sandgate in Brisbane. Those Bayside areas have undergone a real surge.
Great stuff. Thanks for joining us, Justin.
Absolute pleasure. Thanks for having me. Cheers.
Well, we're catching up with the founders of Msquared Capital, Paul Myliotis and Paul Miron. And these guys are at the coalface. They have a business that gets right into the property sector. They take in money from potential investors who are looking to invest in that space, and they provide the people who are actually trying to do something in the property sector. So their view on what's going on is particularly relevant, guys. Good to see you.
Thank you, Peter.
All right, so let's talk about property prices. We're seeing they're going up.
Absolutely.
So the Doomsday Merchants got that one wrong, Paul?
Yeah, absolutely. Look, I think I was on your show 3 months ago. Exactly,
okay,
I can't remember. We went through an example of when the property prices did fall, and really there's a couple of characteristics that we look for. We look at a collapse of market, we look at higher unemployment, longer term, and obviously we've had in COVID short-term unemployment go up higher, and we look at a restraint on capital and interest rates going up. So we haven't seen all of those things, and with all of the items that the government has stepped in with JobKeeper, JobSeeker, they've been quite successful in keeping everything normal during the last 12 months.
Yeah, and Paul Myliotis, the interesting thing is that we're not really above, I only read today, the May 2017 peak. So we went down across 2018 into 2009, and then we started to rise and we lost a bit of momentum. But in many ways, it sort of says that we've got some upside here with such stimulus and high interest rates.
Yeah, look, we're seeing resilience, particularly in Sydney, but we're seeing a big skew as well in Brisbane at the moment. We think there's a big flow of people going up and living in Brisbane. They've performed very well in COVID. Do you believe it? So we're of strong belief that Brisbane property prices will also increase. Sydney's will continue to increase, and even Melbourne now will tip upwards as well in the residential space.
Yeah, and you guys have been historically East Coast lenders, but you got scared during the coronavirus and you weren't interested in going to Melbourne, lockdown and problems like that. Because Queensland wouldn't let you in, but still you weren't particularly, you're keeping your investments close to home. But you've now broadened the outlook. But East Coast is back in.
Yeah, it is back in. I think
Brisbane the favourite.
At the moment, yes, we think that Brisbane will outperform. Yeah. We'll see if our predictions are right, but you will see investment opportunities definitely coming on board from us from Brisbane, and we've seen a few opportunities in Melbourne that we're interested in as well. So we were pessimistic about Melbourne. I mean, the poor state was locked down the most. But I think a few things are giving us a lot more confidence. The stamp duty, and Paul can talk to stamp duty all day, but the stamp duty or the halving of stamp duty in Melbourne, I think will give it a real big sugar hit in the short term for residential particularly. So again, we will look at residential assets in certain parts of Melbourne, absolutely.
And is there a feeling, because you guys would not want the people who borrowed from you to face a recession, and we've sidestepped that, and we've talked before, the seriousness of the recession would be a big worry, and then the collapse of house prices would be even a bigger worry, because the people who borrow from you, they put their properties up and you discount it by 35%. So the house price would have to fall by about 35% before you got really worried. But all those big worries are kind of moving into the background now, aren't they? Aren't in the foreground anymore.
Look, the picture right now is a lot rosier than it was a couple of months ago. Yeah. But it still doesn't mean we're completely out of the woods. No. So let me go through a couple of different points. Even though the aggregate data...
Until he comes from Russia. He's always looking for the thing that might make you and scared and pessimistic.
I think it's more the economist in him. It's surprising that you're not like that as well.
Yeah, it's the worst combination of Russian economists. But go on.
Okay, so the aggregate data does show the market going up. Yeah. But it doesn't mean that all property is going to go up. Yep. There is still segments of the market that are under pressure. So we're very careful with retail, commercial. Yeah. We still don't know what the iceberg effect there is with zombie companies. I mentioned to you before is that everything to do with the JobKeeper, JobSeeker is propping up these businesses. Yeah. But once all those stimulus is gone, are those businesses still going to be profitable?
Yeah.
Are they going to be able to maintain the mortgages? Now, at the end of the day, what's happened in this year, interest rates have gone down, the stress is not that much, but if they're not making profit, we're going to have an issue there. So that's one thing. Not all property is the same. So even residential, saying, oh yeah, residential property is going up. In the city, residential property, in the inner circle, where vacancies are very high, up to 10%, and rents are still lower than they were a year ago, it's still under pressure.
And that's a bit of the Airbnb effect, lack of tourists and
Yeah.
stuff like that.
Absolutely. So the property market from every single geographical area, so you look at Sydney, you look at Melbourne, you look at Brisbane, is behaving differently as well. So you do need to know the market inside, you need to know the market in detail, and you need to do your demand and supply analysis as well.
Okay.
These are the real fundamentals we have to look at.
Now, you guys brought up stamp duty, and
Yeah.
there's a decision by Premier Dan Andrews,
Yeah.
a solid one, which he says is going to be a sugar hit.
Yeah.
And New South Wales is thinking about a stamp duty
Yep.
play. Talk to us about what they're proposing, and what do you think the effects would be if they get it up?
Look, the fact of the matter is, no matter how much research I read, there are some very positive things in overhauling stamp duty. There are some very positives in relation to making property a little bit more liquid. Downsizers will be induced to actually sell their houses, buy something a bit smaller, a bit more
So
suitable.
they wouldn't pay stamp duty when they buy a smaller place. They sell their place
Yep.
in a bigger area, a bigger block.
Yep.
They might go to a downsized type of apartment or something like that.
That's
No
right.
stamp duty for them because they're retirees doing that. Good idea or bad idea?
Yeah, and for that perspective, that could work. But at the end of the day, the mathematics of it is that if the ongoing cost of living in that property, where they had no living expense in relation to a land tax, now they have to pay it, it's going to affect the income. So,
And I think it's
there's
also
pros and
important,
cons.
Peter, not to interrupt Paul, we don't know
Well,
what
why
the
not?
actual...
We always do that with
Yes.
him. It goes on for a long time, but go on.
I'll get in, don't worry.
what the detail is. We don't know the detail. At the moment, it's
Yeah.
at discussion stage.
Yeah.
So we can analyse it as much as we want.
Yeah.
At the moment, people are saying, well,
Alright. But
is it a land tax?
You're
Is
an
it
accountant, Paul. you
Yeah.
know, and what do you think about the idea, and how do you think the clients in the past that you've worked with would think about, with stamp duty, it's a one-up cost. It's a tax deductible cost for a business.
Yeah.
Yeah.
What's an amortised cost?
Yeah.
Over time,
Until
yeah.
they sell, they can sell. But the idea of an ongoing property tax, how do you think?
Look, I think it'll suit
Business to work.
certain parts of the market. So if you're
Yeah.
a first home buyer and you don't have any first home buying benefits, and we all know that if you're buying, for argument's sake, in Sydney, you need a hell of a lot of a deposit to get in. It will benefit that market. For the big property holders, they're already, well, for lack of a better word, whinging about land tax. It's going to increase the cost of holding stock. So I think certain segments will benefit.
Yeah.
Look, I don't know if it's going to benefit or not until I see the detail, but for us as a lender, it's not going to affect things, but it'll allow, as Paul said, people to, the liquidity of the property market may change. You can sell without the transaction cost. So I think there are benefits in seeing that.
I don't think a lot of commercial property owners will actually opt into it because their payback ratio, according to some research that I've seen so far, is 5 years. And a value of a commercial property is all about the yield as well.
Yeah.
So if you're paying 2.6% of unimproved land value on a yearly basis, are you devaluing your asset going forward?
And correct me if I'm wrong, but if an owner opts for this property to be an ongoing property tax property, it's that forever, isn't it?
That's right. So
So it does affect the price that someone's willing to pay.
That's right. That's right. So the
That'd be
next
very
person buying it,
Yeah.
is he valuing it without the option versus another property? So there's going to be some teething. It's going to take a number of years with this particular proposal for it to teeth completely out of the system.
And you guys would remember a number of occasions where state treasurers have come up with what I thought was a great idea for property, and property prices have fallen. In the case of Victoria, it's going to help property prices, isn't it? Because it's just a cut.
It's a
And the beauty is there, you
yeah.
can turn it on and off, but it's a short-term thing.
Yeah, but the New South Wales one, that could be like, who knows what's going to happen here.
Well, see, the thing is, I don't want to criticise it, but it needs to be simple.
Yeah.
And I think the current format is not simple enough.
Opt in, opt out. That's not simple, is
No, and then how do you value one?
Okay.
Is the asset value worth more later or not? But,
Okay.
yeah. So
Well, last topic, and we've touched on already, this retirement income review.
Yeah.
That's where the idea of letting people get out of their property and downsize their stamp duty. But you're worried about other aspects of that?
I think one of the most interesting parts out of the 650-page document,
Which
I
you
haven't-
read.
every page, mind you,
Yeah.
it only took the government 4
You've
months
got
to
a few
read it.
boring friends. There you go. Yeah.
But what I was really interested in is Josh Frydenberg's remarks.
Yeah.
So the document actually goes in and talks about the behaviour of retirees. So the behaviour of retirees is no matter how much money you actually save for retirement, retirees are not they don't like the idea of living off the capital.
No.
So you know they don't want to dip into what they've actually saved money in. So in
But term deposits not helping them.
not absolutely. So if they don't have the term deposit, they need some other alternative fixed income. And without that, the behaviour that you're having with these retirees is that they'll actually forego their lifestyle and cut down on their spending, but they don't want to touch that capital. And that is a real big issue now for the government because they're going to try, without having or inducing them to have income.
Yeah.
How do you get that balance?
And an interesting thing which you guys understand better than most is that I've got friends who live in really big and expensive properties, but when they do the equations on downsizing, they want to go from a big house, say in St Ives, to an apartment in, say, Kirribilli, and there's no big gains.
Dollar for dollar. We find the same things no matter where you're looking. Houses to units are for new units because a lot of the retirees want to go into new stock, we find.
Yeah. And then they've got the quarterly spend as well on Australia.
That's right.
Yeah, so that equation is not working out.
No.
And so I can understand why they're trying to take away the stamp duty impost. But it's not easy, is it?
That's not an easy one. And there's another part, which is a whole can of worms as well, is what's called ADG sizes for apartments as well. So there's a standardization in relation to how many threes you can build, how big they are, and we've had a tendency, or developers had a tendency to do smaller apartments to maximize the return. Now, empty nesters are not going to. They don't want to. They're not going to sell a 5-bedroom house to move into a 75 square meter 2-bedroom apartment. They want luxury. They want a certain type of 3-4 bedroom apartment, and they don't exist.
It's interesting you should talk about that because I've interviewed Tim Gurner in Melbourne and Tim Forrester from Aria Group in Brisbane, and they in a sense have a model which is build really a luxury apartments that are then sold to people who are investors who then after 2 or 3 years move into it, and it's an interesting model. But they go totally high end. They get plenty of space and all that sort of stuff, and it's a model that seems to work.
Well, they're performing very well, aren't they?
They're performing very well, and that's exactly it. Is that if you're looking at the planning system, it's hard for you to actually get an approval for a building and say, I want half of these buildings to be these oversized 3-bedroom apartments. It's very hard to get away from a planning system. You actually have to put a very strong case to local council to get that approved. So there's another obstacle there in relation to having that product in the marketplace. But yes, those two developers have been very successful in delivering the empty nester product.
Yeah. Both for award-winning developers. Guys, thanks for contributing throughout the year. It's been very insightful. I always like to get experts who are actually at the coalface. And I hope you have a great 2021, because 2020 was hard, but you've done okay.
Thank you so much.
Peter.
Thanks, Peter.
Cheers.
Cheers.